So the biggest surprise for me was this is probably the only industry where you say, hey, I'm going to go and give you a 70% or an 80% chance of success, and you have to accept that as normal. So if you walked into the hospital and you said, your doctor said 70% of you will survive and the remaining 30% will end up in the morgue. Okay, I've got all of this data. What do I do with it? So merchants need to then be able to take actionable insights away from the data in terms of what can they do in order to drive a particular metric if you have decided on a multi-processor strategy. But I would first recommend that before you go down that path, you need to make sure what your rates are and identify what are the key weaknesses of the payment service provider that you're working with. It's not that you just flick a switch on and the next provider will be able to do magic.
Today, the guest of my podcast is Anta, the CEO of Inai. Inai is the payment intelligence platform. Merchants can use Inai to dive really deep into their payment performance analysis. Inai also provides actionable insights on how to improve payments performance, including reducing cost of processing payments, increasing success rate, or reducing involuntary churn. I was really excited to talk to Anta. Anta has very sophisticated payments experience and very interesting opinion on certain things. And before creating Inai, Anta worked on the merchant side of the business. In this conversation, we talk about key payment metrics, metrics for e-commerce, subscription, and marketplace models, payment experiments and A/B testing, state of the payment industry in general, and of course, we discussed some actionable and practical advices how to improve payments performance. Hi, Anta. Thank you so much for joining this podcast.
Thank you, Nikita, for having me. Great to be here.
What do you think are the most important metrics for payments performance?
As a merchant accepting payments, I would care about auth rates, what percentage of the transactions that I submit get approved. I'm assuming here that you care about everything after the pay button is hit. If you, as a merchant, you will also care about what is the drop off before the pay button. So auth rates, I would also be looking at order level and transaction level authorization rates. This is something that not a lot of merchants that we work with seem to have focused on until they realize why they need to care about it. I would also look at 3DS if you are in markets that do support 3DS, like in Europe where I'm based. You would want to look at fraud, your chargeback rates. You would also want to look at your decline reasons. And then most importantly, cost of accepting payments. As a merchant, we see that many of the sophisticated merchants that we work with, they would then look at these high level metrics, and then they would want to look at this in a granular basis by acquirer, by bin, by issuer, by market, whatever other dimensions that are relevant to your business. Maybe you operate in different geographies or you have different brands. You may want to look at this and be able to slice and dice this at a more granular level. But these are the high level metrics that we see merchants typically tracking.
So it's not just like a couple metrics, it's more about the number of metrics that all needs to be taken care of, and also like some slicing them by many different categories, as you mentioned, and having the comprehensive view. That's the key. Is it right?
Yeah, absolutely. I would say, depending on the industry that you are in, whether it's B2C or B2B, is it a low ticket or a high ticket, depending on the volume of transactions? Are you global or are you just a regional business? The weightage that you assign to those metrics will vary, but we generally advocate, and we also see at least the more sophisticated merchants that we work with, tracking not just one, but a whole range of metrics. And then you have to decide which of those matter to you most, depending on the type of business that you are in.
What are the different metrics you think are for like different categories of businesses? The first thing that comes to my mind is that different payments flow, because there could be payments for e-commerce business, for retail, for subscription business, for marketplaces. And I would imagine like in these different cases, you'll have different metrics that you want to track.
Absolutely. So for an e-commerce business, what we see is that drop off, especially this is card not present transactions, where
Mhm.
Authorization rates tend to be lower, in some cases significantly lower, depending on the category that you are selling on e-commerce. Compared to retail, you are looking at customer drop-offs as becomes one of the key metrics, and authorization rates and the decline codes become key metrics for them. With respect to subscription companies, we see a lot of other merchants looking at churn rates. For the people that are listening in, some of them might already be familiar with merchant initiated versus customer initiated. So, which of those transactions are initiated by the merchant? So, it's not the first payment, but the recurring payment, the second or the third or the nth payment on that particular subscription. So, being able to look at your success rates by CIT versus MIT, and then looking at churn, and then being able to break that churn down into involuntary versus voluntary. What happens from payment failures is typically classified as involuntary, where the customer has not necessarily canceled the payment or the subscription, but it has happened because of a payment failure. So those become important. And then the retry strategy that the merchant is adopting in order to retry those transactions, and what is the efficiency of those retries. And again, they might be on a single acquirer, multiple acquirer, they might be different markets. All the granularities that we talked about in the previous question, merchants may want to dig into that as well. We also see looking at changes over a period of time. So what is my authorization rate today? How does it compare to what it was 3 months ago, 6 months ago? How does it compare with other merchants in the business model or in the merchant category code that I'm operating in? With respect to declines, merchants are also looking at the distribution of their decline reasons. How are they today versus what it was 3 months ago, 6 months ago, 12 months ago? Is that commensurate with the kind of traffic that I'm bringing in?
There was a hot topic in 2024, like introducing benchmarks across multiple platforms and basically like comparing your performance to other players in this market and in this niche. Did you witness any cases where merchants were really surprised when they start seeing their payment performance data? I would imagine there are a lot of merchants who are not looking at the data like constantly. And then when you bring this payment performance data to them, I'm curious, what are their reactions? Is it like aligns with their assumptions, or are they surprised?
We have seen this quite a few cases, I must admit, Nikita. So one was actually a public company in the States. And what we were able to identify for them was that their churn this is a recurring billing, consumer recurring billing company, and their churn was double digit percentage, which was a big surprise to them. And then when we brought it up to them that their retry strategy is actually not adding any value, so what they recover after the first failure is not adding any more to their top line, that was a big surprise for them. And they had not even appreciated that they could in fact change their retry strategy on their payment service provider. I won't name the payment service provider, but the merchant hadn't realized that that is not something that is set in stone. You can actually change the retry strategy on your payment service provider and try to make it more intelligent or more smart, and try on different dates or different times or for different error reasons to improve that performance. So just the knowledge, one is just having access to all of the data. The second one is being able to take action on the data and having the knowledge that you can act on the data. That is not widely appreciated. That was a big surprise for me personally.
What are the biggest challenges with tracking the payment performance data you see, and what are your advices how to solve them?
It's a big problem. I think there is no standardization today across the market in terms of how these metrics are tracked. Even between the payment service providers, each payment service provider reports things slightly differently. So if you are a merchant that is using multiple payment service providers, this problem becomes more complex for you because the reporting is not standardized. The fields that the payment service providers report back to the merchant is not the same. The level of granularity that you get in the reporting is not the same. The newer age players offer more granularities, whereas some of the legacy payment service providers, you can't even get what your 3DS auth rate is in real time. So I won't, without naming any providers, there is a disparity in the quality of the reporting. Like every company, developer resources are scarce. So the merchants need to build both an internal data team and a developer team in order to clean the data, standardize it, normalize it, and then build visualizations and then build anomaly detections on top of it. That we see is a significant challenge
Yeah.
for merchants. And then the last step that we see, which we briefly touched on in the previous answer, is that, okay, I've got all of this data. What do I do with it? So merchants need to then be able to take actionable insights away from the data in terms of what can they do in order to drive a particular metric for the business, be it the cost of acceptance, or if they're reducing their churn or reducing their fraud or chargeback ratios.
Mm.
So translating data into actionable insights, that we see as a significant challenge for merchants today.
You mentioned that you're receiving different data from different providers and you can like normalize it, but some providers can expose something that like other providers don't, or they can provide like more detailed data. In general, in the industry, are you happy with the data you're receiving from providers? Can like do they supply enough, or you feel like they're sitting on more data and they can expose more for merchants to be more efficient?
That's a great question. It's a bugbear for us payment geeks, I will say, Nikita. Not only is the disparity across payment service providers, but there is disparity within the same payment service provider. I can tell you that you can get the decline codes from a PSP, and if you don't request for it, which you request for what is called as a network error code, what
Mhm.
you will typically get is a lot of these errors that are bunched together into do not honor category. So what is happening is you have the network response code, which usually looks at the issuer responses, and then they try and bucket these group into different groups, and then they put a different category on top of it: do not honor, suspected fraud,
Mhm.
insufficient funds, what have you. And different PSPs have different logic for this. In most cases, the merchants are looking at these aggregated responses across all the different issuing banks that are there. So if
Right.
you're a United States merchant, there are 25,000, 20,000 issuing banks. So obviously you can't look at all of them, but you are looking at this aggregation. And then the more aggregation there is, the less information and granularity you have as a merchant. So we had this case where within the same PSP, two different merchants are getting different levels of reporting, and unless you go back to your account manager and ask for this, you don't get that additional data. And the additional data can mean classifying your declines as generic do not honor versus fraud or insufficient funds or expired card. And each one of them has a very different outcome from a merchant perspective in terms of the action that they need to take. So definitely we see this as a big problem in the industry. Is there is less awareness, and then needs to be a bit more activism from the merchant side to demand more information and more transparency. It's ultimately their payments, and then
Mhm.
more work needs to be done on the payment service provider side to educate and share this information with the merchants so they can take action.
Do you think there is an opportunity for a standard or for some sort of regulation demanding providers to report data in a certain format?
I feel that regulation has sometimes unintended consequences. I
Mhm.
would much rather prefer if there is like cooperation between the different suppliers as well as the
Mhm.
merchants. So there is active in sharing of information. Your forum is a great one where providers or merchants can come on and share different perspectives. And I would prefer to have a more collaborative approach rather than necessarily going down the regulatory path. At least that is my take on things, but other people might
Right.
have a different view of it.
I believe for some industries, as we discussed, for like e-commerce, subscription marketplaces, there could be other sources of data that can be useful for merchants. Is it something that you see merchants to cooperate with their payments data, or they're taking information from their, from their billing system, from their anti-fraud system or like other systems and merging this data together. Is this a common case? Do you see any challenges there?
We generally don't see it unless the merchant is very, very sophisticated. I would say that most merchants see payments as a cost center, at least the smaller end of them, rather than as an opportunity to grow revenue. And
Mhm.
therefore, the investment in the payments teams tends to be not as high as it needs to be, because this is one where you can actually make a significant impact to your top line and to your bottom line. So we haven't seen that happen, Nikita, in terms of merchants investing significantly to get look at multiple data sources on the higher end. So in the enterprise side of the merchants, they have large teams. There we see this happen much more in a much more common fashion, where they are looking at other sources of data, looking at it from their fraud providers, looking at it
Mhm.
from multiple different acquirers or multiple different PSPs, getting benchmarking done through either payment consultants or from their PSPs across other merchants in
Mhm.
their stack. Things like that happen. But for anybody below the super enterprise or enterprise level, this tends to be not on the priority list just as yet.
Do you think merchants who choose to work with one payment provider, they can satisfy their data needs with this provider and with the dashboards that their provider gives them? So, for example, if you're using only Stripe, right, there is like a charts and Stripe dashboard, so you can just use them and be happy with this.
So at this point in time, we don't see the service providers doing the job that needs to be done in terms of giving the merchants with all of the information. So I'll give you some examples,
Hmm.
right? You, as a merchant, you know that network tokens can reduce the cost of accepting payments, but not all issuers have accepted network tokens. So as a merchant using only a single payment service provider, I will want to see which issuers have a high success, have this, what is the success rate by issuer between trying with the raw pan versus a network token. Maybe I try with the network token, but if it fails, I want to be able to retry with the raw pan and see if it succeeds. And if you're doing large enough number of transactions,
Hmm.
that is something that you want to see as an A B test. I don't see any of the payment service providers offering this level of granularity to the merchant to say, hey, this is the reason why for these issuers we don't see this happening, and therefore you should be retrying with the raw pan. Similarly, you take the other perspective on the cost side. Today, there is very little visibility to a merchant in terms of all the fees that they are paying and what are the downgrades that they are suffering either on the interchange side or on the scheme side, and what is the opportunity that they have in order to mitigate those costs. So whether you are a single strategy, or I mean single PSP strategy, or you're adopting a multi-acquirer strategy, we do feel that merchants need to do the work or work with third-party providers who can help them provide this kind of insights in order to drive those outcomes. Unfortunately, this is not figured at the top of the priority list for the payment service providers as yet, and
Right.
therefore the merchants need to invest significantly into this.
You mentioned A/B tests.
Mhm.
I think A/B test is something that payment consultants recommend quite often. And like, hey, if you don't know what gateway to choose, you can go with one and then you can A/B test to and compare what are the costs, what is the success rate on both of them. And I heard this recommendation quite often. However, implementing this A/B test, it's quite expensive because you need to build the integrations, you need to support it from the operational perspective, having both contracts, and then you need like a tooling to measure like the payment performance and the costs. So I hear this advice a lot, and that's something that I would recommend myself. But on practice, it's really hard to do and very expensive to do. Did you witness any like successful cases where merchants were able to A/B test to gateways, or maybe do you have any advices how to make it easier and faster?
It's a great question, and it's also very topical as orchestration has been a hot topic in 2024, as we all know. The operational side of things, which is managing the contracts and managing the operational hassle of dealing with multiple providers, I don't think you can necessarily circumvent that. right? If you have decided on a multi-processor strategy. But I would first recommend that before you go down that path, you need to make sure what your rates are and identify what are the key weaknesses of the payment service provider that you're working with. It's not that you just flick a switch on and the next provider will be able to do magic. So I'll be looking at what are the decline codes that I'm getting from the payment service provider that I'm working with, have the conversation with my account manager to see how am I doing relative to other merchants, right? If you're not getting the raw response codes, the network response code, then try and get those and try to understand, is this the nature of the traffic that you are bringing perhaps? So maybe a fraud related issue, or maybe you're not sending the right payload information to your payment service provider, which will continue to exist if you were to add a new one as well, and or if there is some other issue from their end. So we find that trying to have the conversation with the payment service provider is usually a pretty helpful strategy, and looking at your data to first identify the areas of underperformance, so at least you have a strategy in terms of who you need to look for as the supplementary one, as the second one. Having said that, we have worked with multiple merchants who have this concept of an orchestration layer or a multi processor framework where they continuously try to optimize their performance, which even optimize the payload. So which markets or which bins should I be sending with 3DS versus without 3DS? Which ones should I send with challenge flow versus frictionless flow? Which one should I try with PAN versus the network token? So there are multiple dimensions. Which one should I send additional information like AVS and CVV, and how does that impact your acceptance? So you have multiple parameters to play with, and unfortunately, it's hard to predict from the outside which of these is going to be the optimal combination for you. So unless you try these out and have a robust, as you mentioned, A/B testing infrastructure in place, there are third parties who do this, or you build this in house, and then I would suggest that you try and go down this path. But the first step is at least understanding where you stand and having that conversation with your PSP.
Having all the payment related information is great, and we briefly touched about like on what merchants can do with this. So what are the maybe the most successful cases you observed that merchants took this information, took these insights, and they actually implemented or they changed?
Bin-based routing is something that we have seen a fair bit in terms of identifying which issuers are supporting 3DS or different 3DS flows and trying to optimize that. Identifying different acquirers for different markets or by different bins, that is something that we have seen. Payload optimization, network token versus PAN, 3V, with CVV or without ABS. What is the impact of that, both on the cost side as well as on the auth side of things? We have seen subscription merchants use this data to optimize their retry strategy. We generally see that the timing of the retry makes a material difference. Typically, failures tend to come from insufficient funds or do not honor, and then trying to use this information to try to optimize your retry strategies. That is something that we've seen a lot of merchants that work with us do this successfully. Merchants also use this data to identify where is chargeback or fraud issues coming up. How are they doing? Is it coming from a specific reason? And is this a particular vulnerability in their return policy or in their refund policy, and identifying those gaps that they can fix? So we have seen multiple use cases across the different dimensions. On the cost side, there's a whole range of things that we have seen. You might be accepting business cards, but you're not optimizing the cost of payments on business cards by sending level 3 data. So that is a straightforward opportunity. You might be suffering a lot of interchange downgrades, for example, and you have opportunities to try and just sending additional information to your existing PSP, not actually changing your provider. It's something that you can easily control as a merchant. Just sending additional information can reduce the cost of accepting payments.
I think it's a great advice in general, like before going multi-processing way, just to try to fix maybe you have like low-hanging fruit with your existing integration, with your existing implementation. That can be very beneficial.
Absolutely. I couldn't agree more. There is a lot of low hanging fruit, and the low hanging fruit is hiding in your data. So the first
Mhm.
step would be to try and get hold of as much data as possible and usable, and try and make sense out of that.
We live in the era of Gen AI, and it's been by far the hottest topic of the 2024. And you're working with the payments data. Do you think we are already in a stage where Gen AI can analyze payments data and give like a proactive insights, something like, hey, for this card brand in this country, for amounts higher than this amount, you see a slight decrease in the success rate by 2%, and being like very clear, proactive, without merchants like digging into this data. Do you see it's happening already, or do you feel there are any kind of like roadblocks or something that we need to solve first before we'll be there?
I think we are, I would say 70 to 80% there, Nikita. So for the use case that you described, the
Mhm.
first part is the identification that there is a problem. Then the triaging. So you have decrease in auth rates. And then the triaging is the case that you mentioned, which is high dollar value
Mhm.
transactions on some possible combination of factors, which is this
Right.
issuer or this country or this
Mhm.
market. And then you have the solution side. What do you need to do now? There are tools out there, including ourselves, who are doing this kind of stuff, which is up to the triaging part is now available in the market, where you can identify the problem and then triage it. The last step, which is the predictive solution, that is something that we I haven't seen too many solutions out there as yet. So that is something that we need to work on, because we don't know what additional information can necessarily exactly predict the success rate with that particular PSP. So sending AVS for these issuers will improve your auth rate. I don't think we have enough data to be able to say that with in a statistically significant way. Or try these issuers only with network tokens will do that. But I think it's only a matter of time, given the pace at which this technology is rapidly evolving. I think the more scary part is on the fraud side, because you're having Gen AI being increasingly being used by fraudsters. There are different models that are now out there, and unless merchants start to keep up with it on their side in terms of blocking fraudulent transactions, the fraudsters generally tend to be a step ahead of this. So it's a long-winded way to answer your
Mhm.
question, but I think we are 70-80% of the way there. And very soon we will see these kind of AI agents. It wouldn't surprise me at all if in 2025 we see a bunch of AI agents appearing, which will do at least the lower level dirty work that payment strategies at these companies have to do, which is looking at your data, identifying the anomalies, triaging them, and then identifying whether this is a problem that I need to worry about. So my auth rate
Mhm.
has dipped by 5%. Is this happening across the board? Is this something that I need to worry about? Or is this just par for the course because I bought, my marketing team sent a bunch of, not so great traffic. So that part, I see AI agents popping up at some point in 2025 or in 2026.
I think you raised a very interesting question that like the final part of your flow, kind of like on the solutioning and on the problem solving. Basically, that's where the integration with the payment service provider needs to be adjusted or needs to be updated to run experiments. And I think you're right, it's also can be automated. Do you think there will be a blend or maybe a new type of the solution where there'll be not only like payment analytical platforms that gives you insights or drawing charts, but also they'll be more like blended with merchants integration with providers?
Interesting thought experiment. I'm a firm believer in the agents and vertical agents taking stronghold over different industries, and payments is one of them. So I do see that agents will be used to supplement humans in the decision making.
Mhm.
The day is not far when the agent can identify that your integration with your PSP is not optimal. So to identify that you're not sending the right payload, is one dimension of the integration, right? That this payload information is either not being sent or is being sent in a format that the PSP cannot understand, or is being sent, but there is some issue at the PSP and they are not forwarding this on to the network. So I think it's just an evolution process. And the day is not far when agents will be able to do all facets of that value chain. The last facet that to fall, which the human will want to own, is the action, taking the action, which is fixing the integration to make sure that the payload is indeed being sent. It might take a bit longer, but it's only a matter of time, I believe, where the agent can eventually take that over as well.
Another hot topic of last year was expansion of account-to-account payments. Do you expect that it will affect payments data or how we even think about payments data?
From a payments data perspective, I don't see this is going to have a massive impact for vendors like ourselves or anybody else. As a practitioner looking at payments data, this is another source, another payment method like Apple Pay. Personally, I was disappointed with how much adoption there has been across the merchant base, at least that we support. Maybe this is not representative of the entire market, but just based on the vantage point that we sit in, we didn't see that there was such a huge uptick in user adoption just as yet in terms of account-to-account payments. And I think that comes down to the customer proposition. If I can pay with 2 clicks or 1 click with Apple Pay, why bother with pay by bank? Particularly in an e-commerce kind of setting. So unless there is a significant incentive, we think that pay by bank is not necessarily going to replace cards. Cards are here to stay. There are certain use cases where pay by bank makes much more sense. So if you're a recurring billing customer, you're on a subscription, it's easier for you to put your bank details in and then have it come out of your bank account rather than on your card. And you can devise an incentive structure between the merchant and the customer so that the benefits that the merchant is receiving with a lower cost payment rail can be passed out to the customer, because the customer typically is going to stay with them for several months or years.
Right.
Or in B2B use cases where the ticket size is large. So those cases, we do see paper bank adoption being much higher over the course of the year than it was previously. But in a standard e-commerce use case for purchasing a t-shirt or your watch, we haven't seen that much penetration as yet from pay by bank.
Do you think the biggest blocker is the user experience?
The user experience needs to be very, very slick. In the markets where I see pay by bank being successful, which is typically UPI in India and Pix in Brazil, you had a centralized authority driving it and the user experience being very, very slick, and cards not already being the entrenched payment method to the same way that they are in the US or in Europe.
What is the biggest problem you see on the merchant side, or what they do wrong? Or maybe if I paraphrase it, what is the most common advice you give to merchants to improve their payments performance?
So in our interactions with hundreds of merchants that we've worked with, we see that there's a significant majority of them who look at payments as a cost center and not as a revenue driver. The moment you can change that perspective as a merchant, you realize that you have so many more tools available at your disposal to actually grow your revenue rather than just looking at it from a cost perspective. So a case in point is a subscription merchant who did not realize that they could change their retry strategy without changing their billing provider, without changing their payment service provider. By just tweaking their retry strategy, they could recover more revenue, whereas previously their viewpoint to this was, I can only go to another provider to reduce the cost of accepting payments. And increasing revenue by 2% is actually going to add a lot more value to your business. And in a subscription case, the improvement to LTV was even larger than that, because typically their customers tend to stay around for several months. And this customer had monthly recurring plans. So as a merchant, I would look at every transaction and refusal reason that I get back from my payment service provider or payment service providers, as the case may be, as an opportunity for me to learn, to improve my payment system, and then grow my revenue. So if you have that kind of mentality, I feel that you are going to much more likely to be successful.
If we look at the payments industry, what do you think is the biggest problem or the blocker for us to move to the next stage of payments maturity in order to provide like quick, fast, secure, and convenient payments?
I didn't grow up in payments. So I came from banking, then I ran a merchant consumer subscription business, and then came to payments based on the pain points that I faced. So the biggest surprise for me was this is probably the only industry where you say, hey, I'm going to go and give you a 70% or an 80% chance of success, and you have to accept that as normal. So if you walked into the hospital and you said, your doctor said, you have a 70% of you will survive and the remaining 30% will end up in the morgue, that's not an acceptable answer. But in payments, we think that that is acceptable. So I think that mindset has to change. We have to get acceptance rates high. So that's a big dimension that I look at. The second one is with Gen AI. We think that fraud is going to be on the rise. Fraudsters have much more tools, much more sophisticated tools that are now available at their disposal. So managing fraud and chargeback and doing and accepting payments in a compliant way is going to be a big challenge for the industry going forward. The third dimension that I see as a big challenge is going to be the fact that businesses are going global earlier. So most businesses want to operate in a global framework like ourselves, but we know that every country operates slightly differently. And then the last part is regulation. So we have new regulation coming in the US. We had Durbin Amendment the year before. We had regulation last year about being able for the customers to be able to cancel their subscriptions at the bank level. So we have new regulation coming in, and for merchants, this opens up a new range of uncertainty because they have to stay on top of what is happening on the regulatory side and stay compliant while also managing their business and all the other challenges that we discussed.
Yeah. Anta, thank you so much. It's been a pleasure, and I believe it was a great conversation. So if people have any follow-up questions, what's the best way to reach out?
I'm available on LinkedIn. You can find me as Anantharaman Pattabiraman. We'll probably put a link in the episode, or you can reach out to me at Anta at inai.io. Those are the two best places to reach me. Thank you, Nikita, for having me, and thank you to all your listeners for listening to this conversation. Hopefully you got to the end of the episode, and hopefully there was something useful.
Thank you so much.
Thank you.